Is a second recession inevitable? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because we're going to talk about the question of if a second recession is inevitable. Now, before we go through this article from Yahoo Finance, where economists are warning it's a genuine risk, let's just remind ourselves, about the first recession Australia had in, 28 years. You can see on this chart, seeing our GDP growth, we had 2 quarters of negative growth, everyone. Because, this is the definition of a recession. Let me just bring up this definition here. A period of temporary economic decline during which trade and industrial activity are reduced, generally identified by a fall in GDP in 2 successive quarters. Now, look at that. We had a very dramatic fall there, over 6%. Now, for Australia, that was huge. For other parts of the world, not so bad, really. Other parts of the world, we look really good. But what saved us from this recession? Why did we bounce back so magically? Well, I think we all know the answer, everyone. Yeah, but you guess. I'll have a shot of coffee, and you can guess what it is. And I'll just leave this chart up here to show you all. This one referring to the government debt. The stimmies, guys. The intervention, the stimulus. That's what's pumped up the market. We're seeing it in home building. There you go. Look at the number of home builder applications alone. This is the number of building approvals. The light blue line is private sector houses, and it's definitely overheated. Anyone involved in the residential construction game can see how it's overheated. That's what's happened. That's what saved us from the recession. Housing is the piñata that our politicians hit to stimulate the economy. That's what it is. This is why whenever anyone's talking about social housing, it's not going to have as big an impact as the home builder. Home builder, every 15 grand, you get someone spending at least $150,000 of their own money, and that's going to include 10% GST, so they're getting it back. It's going to create more economic activity than just throwing it into social housing. And that economic activity will reduce the demand for social housing. That's how you want to get it happening, guys. You want to keep people out of government housing, off government dependency. But I guess certain political ideologies want to encourage dependency on the state because, that increases their voter base. So let's have a look at this inevitable recession, or a genuine risk, according to economists. What do you think, everyone? Do you think it's inevitable? Australia's economy could fall into its second recession in as many years if the COVID-19 lockdowns fail to end within weeks, economists have warned. The country will technically enter recession after 2 consecutive months of negative growth, and Federal Treasurer Josh Frydenberg is already flagging Australia's GDP growth will be in the red for the July-September quarter. Frydenberg said on Thursday that the most recent lockdowns affecting Sydney, Melbourne and South Australia will have a hit on the economy. We'll see that in future jobs data as well as in GDP growth numbers, he told the ABC. Well, if we let's look at the unemployment rate. Where are we sitting here? Wait a minute. There you go, 4.9%. I know some people don't trust that. You've got the Roy Morgan, which is about double. But this is the data that's going to be used to make political decisions. So, that's it, guys. Our expectation is that these lockdowns are costing around $300 million a day, which is a very high price. And of course, we're not out of it just yet. Sydney and surrounds entered a lockdown on the 26th of June, while Melbourne entered a lockdown on the 15th of July. South Australia announced lockdown restrictions on the 20th of July, meaning more than 13 million residents across Australia are now under stay-at-home orders. And I think Queensland, we've closed our borders to New South Wales as well. I think our mask mandate has been extended by a week. There you go. So, we were probably expecting that the September quarter is a negative. Let's wait and see what happens in the weeks ahead, Frydenberg told Sunrise. To have your 2 biggest states, New South Wales and Victoria, in lockdown is a big blow. Again, that is going to play out in many ways, but that's why our economic support is there. Treasury estimates released after the weekend predict GDP will take at least a 1% hit over the September quarter. December is the one to watch. Prime Minister Scott Morrison believes Australia will manage to return to growth by the December quarter. I spoke to the Governor of the Reserve Bank only this week and the Deputy Governor with the Treasurer, and they shared an outlook, as we do, that is, while these impacts of the lockdowns will be here in this quarter, in the quarter that follows, should we continue to be on the path we're on and in increasing our resilience, then we can expect that to turn around in the December quarter, Morrison said on Wednesday. However, economists are less confident. Market Economics Managing Director and economist Stephen Koukoulas said that while it remains unlikely Australia will etch 2 consecutive quarters of falling GDP, it does remain a genuine risk. I mean, here's the thing. All of this spending and economic activity is pumped up by government stimulus, which is future spending brought forward, which is increasing our government debt burden significantly. Wait, no, wrong one. There you go. Is it something that... Does it matter? Future generations. Don't worry, guys. I'm sure our current politicians, they'll all be dead by then in 2080. So will most of us. We do know the following for the light 2021 December quarter. Exports are softening as China slows, and this will likely be the case in the December quarter. The rise in unemployment now may linger, meaning consumer spending will not bounce back much, he told Yahoo Finance. Importantly, unlike in 2020, there is no extra stimulus coming from interest rates or fiscal policy. Any bounce back will be severely restricted because of this. Well, don't worry. I'm sure you can convince our Reserve Bank governor to push the cash rate, guys, down to negative. Why not? He said population growth, which is currently near zero, will also act as a drag on growth, while slowing construction activity as building schemes expire may also limit potential. Now, here's the thing to consider. This chart is showing you our GDP growth per capita. And what I've documented on this is the trend. Now, the trend line is the black line. And see that big fall? That was the GFC. And ever since then, majority of our growth has been below trend. And the trend is heading down. So we're still growing, but population growth has been dragging down the growth per person. So it's not as good, everyone. So maybe we'll see an increase in wages. This chart I can throw out, but this one here, maybe we'll see an increase in wages now that immigration is at zero. March quarter could deliver unexpected sting. The length of, you know what, this all aligns with what the banks are doing. How they're extending their mortgage holidays and they're not going to repossess any homes until next year. Well, there you go. It shows you. They know what's coming. They know we're hitting another recession. What do you think? Another 2 quarters, a double-dip recession? The length of the lockdowns and whether financial support increases with tightened or prolonged restrictions will be the key indicators of whether December will record negative growth, AMP Capital Chief Economist Shane Oliver told Yahoo Finance. While the vaccine does offer some hope, it's more likely that any economic recovery will be fueled by post-lockdown spending, as has been seen around the world, and following the long national and Victorian lockdowns of 2020. There's another technical risk. Last year we almost avoided a recession, but we got there because of the technical contraction in the March quarter, Oliver said. This is partly due to weakness triggered by the early 2020 bushfires. It didn't take much for the economy to slip into negative, given the national lockdown towards the end of March. However, a similar technical contraction could potentially unfold in the June 2021 quarter. Coupled with the near inevitable September contractions, there is potentially a recession to unfold. There is a non-trivial risk that the lockdowns we saw starting in Victoria in late May, going into June, and then the end of the next month in New South Wales, Queensland, Darwin and Perth, could knock the June quarter into recession, Oliver said. I think that's unlikely, but it is possible, and then you get a recession that way. The ABS statistics will release GDP figures for the June quarter on the 1st of September. So there we go, everyone. Potentially a recession. What's the solution to this? Well, should there really be a solution? We're in a recession. There's a price to pay. There needs to be some creative destruction in the economy to create opportunity for others. The people who are leveraged too far, who are too close to the edge, maybe they need to have a reality check. Sometimes through no fault of your own. That's a sad part of life, guys. And it happens. You got to deal with it. Or is that just too harsh for today's average Australian to even appreciate? Let me know what you think in the comments, everyone. Thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan of the channel and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can use SelfWealth or Stake, buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. See you next time. Bye for now.